Hi, everyone. Welcome to Trading Edge 360. Today, we are going to talk about strategy, systems, and global trends, and to help you find a trading edge in the current markets today, and hopefully help you generate lots of profits in the longer run. Um, to start off, I will go through some disclaimers. Disclaimer that, of course, this is just for educational purposes only, not investment advice. You have to consult your investment advisor for that. And we own the rights to the materials used, and we accept no responsibility for misuse of our materials. And housekeeping matters. If you're logging in, depending on your interface, there should be a Q&A button on the chat toolbar, and you can put in the questions if you have at any time, and we will address this most likely at the end of each presentation. But if in the course of the presentation, it seems relevant, it could be addressed as part of the presentation as well. So just remember to type in your questions at any time to help us understand what needs to be answered at the end. So first, our partner broker, Go Markets, it's Australia and Mauritius based. They have licenses by the ASIC and CSAC, competitive trading costs, and they have advanced trading platforms, and the customer support is excellent. And you can just drop us an email for more information, for promotions that will help you get the most competitive offers. And today, one of the key person at Go Markets will be presenting as well, and he'll offer something very interesting to all the audience as well. And also shout out to our media partners, wealthenjoy.com, yieldsavvy.com, and onlinetradersclub.org. Right, thank you for always being supportive of our initiatives. And so by way of introduction, my name is V, and I've been in the market since a very long time ago, since 1998, and I've worked in most of the major, in fact, all the major financial centers in the world. I started in London, worked in Singapore, Singapore, New York, and Hong Kong, and also Seoul. So I've founded I worked in several investment banks, and I founded Track Record when I decided to take the proverbial time off from investment banking, and I decided to start Track Record Trading Academy to primarily provide training to institutional traders, right? So I was providing training to both junior and senior traders across different institutions, banks, and hedge funds. And I found that there was a huge gap between the knowledge base as well as the expertise between institutional traders and the retail traders, right? So most retail traders, they just have access to, of course, at the time, now there's a lot more available. At the time, it's not as readily available. So I adapted our training programs for the retail investors and retail traders, right? So Track Record Trading Academy, we were set up to empower traders with the skills, the mindset, and strategies to succeed in all market conditions. We founded in 2016, and we're a global training provider. We've been providing training across different financial centers as well. And the programs are tailored to suit beginners to professional traders. And I guess what makes us different is that it is originally meant for professional traders who have been doing for a long time. They get paid a lot of money to trade, and for it to be worth their while for the banks and the funds to pay us, it has to be, of course, useful, applicable to markets at all in all conditions. So it's adapted to help you also form a trading process and adapt and put trading principles that will succeed in the longer run into your risk-taking framework. So we talk a lot about the risk-taking framework because it's all about having a structured process to help you excel and also survive in all market conditions, right? And when I decided to adapt the professional training to the retail trading sector. We wanted to bring what Wall Street has to Main Street. We adapted the same trading principles, same risk-taking structure, and put it into remove the financial jargon, put it into real life language that people can understand, and give you guidance as to how current and future market conditions will be as information gets absorbed by the market, right? So for those who are new to us, you can sign up for our newsletter for free. We should talk about timely market changes as well as possible probable market changes in the days ahead and the weeks ahead. So today we will have a big turnout, right? And we have some different speakers from all different approaches talking about the edge that they have in their trading. So we'll start off with Alex Kozulin. He and I will be talking about systematic and consistent approach to day trading. It starts at 10:30 a.m. Singapore, which is 12:30 Australian Eastern Standard Time, right? That takes about 40 minutes, and we'll have a 10-minute break. And Dan Lachlan Meakin, who is the head of research among his many roles in Go Markets, he'll be talking about outlook for the hot markets in 2025 in gold, cryptos, and AI stocks. Of course, these are already established trends, so everybody wants to know, does it continue, or does it do we have a retracement, or is it the end? Is it too late? He'll talk all about this in his presentation after the which starts at 11:20 Singapore time. And Mike Smith, CEO of Trader IQ, he will talk about money while you sleep, which is a great thing to have, right? Nothing better than sleeping and making money at the same time, which is essentially about exciting innovations in automated trading. And that's a topic that's very popular with retail traders. Most retail traders have a day job, or they have a life that is not all about trading, so they want to know how to automate their trading. And Mike will tell us all about it in his presentation. That is followed by Steve Ruffley. His contact is steveruffley.com. He has written 2 books, and he's going to talk about how to interpret news and data. And that's especially important in the markets these days, because news, we have so many news headlines from different sources this period of time, from the US government, from the White House, from the president, from different leaders across the world, geopolitical developments as well. So how do you make sense of all this data and all this news? It's basically information overload. So you need to make sense of what's the signal, what's the noise, and how to react to each piece of news, and basically form a habit of not just following the herd and trying to find what is truly driving the markets. And then the final presentation will be by Alex Yeo, founder of Seasonal Vantage. It's also great to have an idea of how markets tend to behave at certain periods of time. So that's called seasonality, and he'll talk about how seasonality can give you the edge in uncertain markets. And of course, this is something that was not readily available to the retail sector. It was primarily used by professional investors because they have great expensive data sources. But now with the internet, with Twitter and all, it's with the seasonality factors, seasonalities in different markets have become more available to the retail sector. So he'll talk about that. And of course, there's a timestamp for this these presentations. So if you have, of course, we are doing it on a day that most people have something else to do, but you can come back for the one that you're interested in. But rest assured, if you cannot be attending live, there will be recordings. So it will be sent to you in a timely manner so that you can catch up and see what was talked about during that period of time. So we will start at 10:15. We started at 10:15. We will start at 10:30 a.m. for the presentation with Alex. And we're going to be talking about systematic and consistent approach to day trading. Again, a reminder at any point in time, if you have questions, please type into the uh, the Q&A button and your Zoom toolbar. Sorry. Hi, welcome back to Trading Edge 360. Now we're going to talk about a systematic and consistent approach to day trading. And this presentation will be done by Alex Kozulin and myself. And let's begin with some housekeeping. For those who are not familiar with the Zoom interface, there is a Q&A button in your chat box, and you can click that and type your questions in at any point in time, and we will address the questions most likely at the end of the presentation. Okay, so here today for this presentation, we're going to talk about time horizons, the principles of trading that applies to this time horizons, and why this matters, and also why more than 90% of retail traders lose money. And finally, the pros and cons of day trading, because that's one of the solutions for retail traders, day trading, and what a systematic approach look like. And finally, how to develop consistency that will help you be profitable over the longer run. So, and then also we give you a brief introduction about how the day trading approach of Alex works, and it's called Day Trader Pro. And time horizons, obviously, there is two very clear time horizon. One is the shorter term, one is the longer term. Of course, short and long means different things to different people, but shorter term is like in a matter of days and hours, and longer term is in a matter of weeks and months, and sometimes years as well, for those who are much more about investing over the longer run, because they do not have time to be so active in the markets. So that's the frequency, right? The higher, but because of the higher the frequency in the shorter term of trades, you get a faster feedback loop for improvement. Means you will know if you're doing well or badly in a matter of hours and days, especially if you're day trading. And in the longer term, by definition, it takes a longer time for your trades to pan out. And as a result, it's lower frequency. It takes a longer time for you to see the results. So you may not even know if you're on the right track till quite some time, right? Because you need to have a lot of observations before you can conclude whether the approach that you're using has an edge over the markets. And for the shorter term, trading cost is very important. That's why you need to monitor it. You need to find a broker that is not eating up your capital with hidden costs, with spreads, with fees, with funding fees overnight. But for the longer term, cost is still important factor, but it's much less relevant because of your frequency of trading is lower. But here it's not about trading costs, it's much more about holding cost, right? And potential for quick profits, shorter term, I think that's why it appeals to many investors, because it's much easier to show quick profits over the matter of hours, and profits take time to accrue for the longer term horizon. And in the shorter term, sometimes there's no overnight market risk if you are just day trading, but as a result, carry cost, as I mentioned, is less relevant. But if you still trade in the shorter term, which in a matter of days, still there's some carry cost, but it's also not as relevant as the longer term positions that you need to consistently monitor if the broker is charging you the correct funding costs, and even if the position that you have makes sense for holding it over the longer time periods, right? So some people have positions where they expect, and this don't just apply to retail traders, even professional traders, they have positions that last for months, and when they unwind it, meaning they try to take profit on a position, they found that their profits is much less than what they intended, what they thought it would be, because time has passed, things have changed along the yield curve, especially, right? So for those who understand interest rates, and this happens, I've seen quite often in professional settings as well. And shorter term trading is much more vulnerable to headlines and randomness, because in the shorter run, randomness plays a very big part, but the longer term horizon is a lot less vulnerable to randomness. So, but although there are these distinct differences, the principles of trading remain the same across all time horizons. So what then are the principles of trading? You need to primarily, first of all, capital preservation, right? The first thing that you need to learn to do is to how not to lose money. And I think many people are attracted to trading because it's very easy to make money, but it's a lot easier to lose money. So the first thing that you do, you need to protect your capital, avoid large drawdowns, because if you have started with $100, if you lose 50% of it, now you have $50 to get back to what you have. You need to make 100% now, right? By losing 50%, it becomes a almost insurmountable mountain to climb. So protect your capital. And the best way to do this is to size your positions correctly and use stop losses to limit your losses. And then you need to manage your risk. You must always know what's your downside before entering the trade. Most people just enter the trade and hope for the best, and then they decide what to do when things go wrong. And then, of course, they accrue much more losses than they intended in the first place. And it becomes very difficult to climb back and make back the money that they have lost. So you need to use a consistent risk per trade, or if you want to have different sizes for different trades, you need to have clear principles as to how you manage that, right? So you can have many more observations of the trading process that you use, so you can decide and you can evaluate whether it works in the longer run or not. So after having a limited downside approach to trading, then now you must find asymmetry in your trading approach, meaning for what you risk, say you're risking $1, you should always try to make at least $2 or more, right? So the asymmetry helps in the longer run, because even if you are 50-50 in your decision-making process about selecting trades, so even with a low win rate, you will have higher upside in the longer run if there is asymmetry. So you need to let your winners run and cut your losers quickly. Of course, that's a very cliche thing to say about markets. Write your winners, cut your losers, but that's something that most people don't do. In fact, most people lose more than they make, and when they try to be, let's lock in the profits too quickly, and then they hold the losses for the longer run and hope that it comes back and hope everything turns out better for them. But it tends to be that they run out of money, and that's why most retail traders lose money. So this again is something that's very obvious to many people. You need to have trading discipline. But what does it mean? It means that you must have a system and to follow, so that you're not prone to reacting to emotions. And it helps if you journal your trades to understand what goes through your decision-making process and whether it can be improved, and if so, how to improve, right? So you must be consistent in approaching trading, and you must have the discipline to last over the longer run. So you need to stay patient, because you need to have many observations, many trades, watch how it turns out, and to decide if your trading approach has an edge over time. So again, it is important to observe these trading principles over the longer run, whether you're trading short term or investing over the long term. Many people think trading and investing are different approaches to trading. They all have the same trading principles. The fundamentals principles that applies to profitable trading remains the same. So why this topic matters? Because as I mentioned, 90% of retail traders lose money, and that's the observations across many different brokers. It's not because of the system, or not because markets are against you. It's just because they have a bad approach. They lose money because they lack a trading plan. They're trading randomly without rules. They overtrade and trade emotionally. and they have poor risk management. They cannot size their trades correctly. They think they should size according to how they feel, and most likely they have no stop loss, and they have no asymmetry in their trading approach, right? So meaning they have a wrong risk versus reward approach, and they're always chasing the holy grails. They jump from one trading strategy to another, hoping to find something that works, but not all trades will be profitable. You need to have many observations to understand if it works over the longer run. And you need to, of course, adapt to trends and volatility. You cannot avoid having market changes, which is a constant and a certainty in the markets. So you need to understand psychology and find the emotional discipline that's required to succeed. And for that, we will be talking to Alex Kozulin. He is the creator of the Day Trader program. He has 25 years of corporate experience in senior management executive positions, but he became a retail trader 15 years ago, and he's doing very well since then. And he joined the Track Records Trading Bootcamp in Gold Coast in 2016, and he's adapted our trading framework to the shorter run. So with that, Alex, please tell us more about your trading approach.
Okay, thank you, V, and welcome everyone to today's session. So as V mentioned, I've had 25 years of global corporate experience, and I have to say during my time in the corporate environment, I actually had very little direct exposure into the financial markets and trading the financial markets. So when I retired from the corporate sector and made a decision to get involved and learn about trading the financial markets, I actually pretty much started with very limited knowledge and experience, or no experience in trading the financial markets. And so every possible mistake that you can make as a retail trader, I can assure you I've made those, and unfortunately, a lot of those on more than one occasion. And so it became very clear that in order to make progress in this particular industry, you needed specific guidance and education in a proper way to move forward. And so obviously, for me, Track Record, that bootcamp was an important part of my learning and guidance experience. Now, ultimately, what I became was what I would call a swing trader. So what does that mean for me? So I had a number of different strategies. I had one particular strategy for of daily charts. I had another strategy of 4-hour charts. I had another strategy of 1-hour charts, and I was primarily focused initially on the currency markets. And I was looking like over 15 or 16 currency pairs. And so ultimately, what was happening, I was spending hours and hours throughout the day and even evening looking at charts, managing trades. And it was basically my whole life revolved around the screen and trading the financial market. So for me, ultimately, it was not sustainable. So I needed to make a change. And so I went through a process. So what I wanted to do is I still wanted to trade the financial markets on a daily basis, but I wanted to find, well, first of all, limit the amount of time, screen time that I had, and also find a time that actually I could commit to on a daily basis every single day, obviously. So I spent 6 months in essence narrowing down, looking at different markets, looking at different market times, and finding a time in the market that I could see momentum on certain trading instruments. And ultimately, I narrowed it down after 6 months to focusing on one particular trading instrument, trading at one particular time during a day for a maximum of 90 minutes. And after 6 months of that, I spent 3 months demo trading that particular strategy on that particular trading asset, fine tuning it, and then finally went live with that. So rather than trading daily 4-hour, 1-hour charts as a day trader is what I become, I'm looking at 5-minute and 1-minute charts. So a completely different environment. So in order to succeed as a day trader, what is very important is basically having a systematic approach that you can apply on a consistent basis. Now, as a day trader, there's obviously some benefits and some, I'm going to call it cons, not necessarily, but some difficulties. So obviously, and V already made reference to this, high frequency. So when you have a new strategy, obviously you need feedback. And say, for example, you need to place 50 trades in a market to get really understanding of how your strategy works. Now, if you're trading off a daily chart, you may only get 1 or 2 trades during the month. So to get 50 trades could take you 8, 9, 10 months to do that. With day trading, now within 5 or 6 weeks, you've got enough trades in the market to understand the whether your strategy is improving and areas how you can refine that strategy. Obviously, for potential quick profits, winning trades are not in the markets for days or potential weeks. We basically, if you have a winning trade, you'll know within minutes or even an hour maximum. And so you can generate very, very quick profits. No overnight market risk. So previously, as a swing trader, I would get up in the middle of the night, check how trades are going, whether I need to manage them. I don't need to worry about that now. So my trades are closed before I go to bed, so I can sleep very comfortably throughout the night without worrying as to what happens in the US. Long-term fundamental views become less vital. Yes, it's important if you're trading the financial markets to have a macro understanding of what's happening financially globally. However, as long as during your trading time there are no major economic news or data that is being released, we don't really need to worry about it. We can just get on and focus our trades based on price action and momentum at that particular time. And this is a really big benefit, in my view, is the ability to compound gains if you are disciplined. So again, if you're trading longer term and your trades are taking days or even in some cases weeks to deliver a profit, then the compounding impact is obviously a lot slower. But if you can generate profits on a more regular basis, then that compounding effect is of great benefit. And quite often we sort of overlook the impact, the positive impact compounding can have. Now, I wouldn't say this is a negative, but it's something you need to be aware of. As a day trader, trading off 5-minute and 1-minute charts, you need to be absolutely focused. So therefore, it can be mentally demanding during your trading time. And if price moves higher and lower, it is also emotionally demanding as well. So you need to be aware of that. Now, it does, as I mentioned with day trading, it requires commitment. So I trade at the same time every single day. And it's a time of the day that I know I can commit to pretty much 100% of the time. So I know that all I need to do is focus for 90 minutes and I am done. Now, without a structure and basically without a systematic and consistent approach, there is going to be a high failure rate. So they are critical with day trading, is all about having a really proper systematic approach that you can continuously do.
Yes, so you speak of a systematic approach. What are the essentials of such an approach?
Okay, first and foremost, I mean, I know it sounds simple, but you need to have a defined trading plan. And certainly with the Day Trader Pro, the strategy that I trade, very clear rules in terms of what setup we are looking for, very clear rules on how to enter and exit that particular trade. And we talk about edge identification. In other words, has the strategy have an edge over time? Now, often, as you mentioned, V, that traders will change from strategy to strategy, looking for that holy grail. Now, we know that with all strategies, they will perform better under certain market conditions and obviously perform less or worse under alternative market conditions. So you need to understand whether your strategy has an edge. And I'll show you some stats a little bit later on, but went live with this in April 2023. Obviously, different market conditions in 23 versus 2024 and 2025. And the system has stood the test of time, and it has provided positive results over each of those years. Now, systematic approach, risk management, absolutely critical. Now, what percentage of capital are you going to allocate per trade? Is there a predetermined stop loss, and are there asymmetric risk to reward rules? So again, with the Day Trader Pro, we're simply risking 1% of our capital per trade. We have a predetermined stop loss. It's fixed in pips. So for every single trade, the stop loss in pips doesn't change, so you don't need to worry about recalculating stuff. And we're looking for a symmetric return of risking 1 to make 2. Now, journaling is absolutely critical to be part of a systematic approach. It gives you some very important information. Now, it's pointless in journaling after each trade unless you review that particular journal. And this is an important component that I go through, and it helps you refine your strategy if market conditions change. It helps you identify things. It gives you the metrics to ensure that your particular system is working as best as it possibly can. And finally, and this is a key thing, so most of us as traders can follow and understand the technicals and what to look for, but it's the psychology and discipline that is a big determining factor longer term. So you need to be mentally sharp. So whether it's through meditation or some sort of exercise to keep your mind fresh, and particularly after a string of losses, and we will have losses, it's just a fact of trading. Do you have the discipline to stick to your trading plan?
You speak a lot about consistency, but how do you develop this such consistency, right? Everybody knows it's good to be consistent, but how?
Yeah, so that's very important. So obviously, first and foremost is routine and discipline. Again, easily said, a little bit harder to implement. But so for me, prior to any trading session, there is a preparation ritual, go through a number of steps just to make sure I'm prepared, even mentally prepared before a trading session. That needs to become part of a daily routine. By having fixed trading hours, it makes it a lot easier to be disciplined. You know that you've allocated X amount of time each day to that, and you work around that. So that also then becomes part of the routine. And the final part at the end of each trading session, end of day checklist, just a quick through. And part of that is completing a journal, just reviewing your charts, making sure you followed your trading plan. So if we can do this again every single day at the same time, it does become routine, then becomes a habit, and it makes discipline a lot easier. So routine is absolutely critical. Mental conditioning, can't say enough about this, is very important. This is part of my preparation ritual. Is you need to do a self-analysis of your state of mind. Are you calm and focused? Are you ready to trade? If you're running late, you just run into your house, turning on your computer, your mind's thinking about all the other things that happen throughout the day. You're not mentally prepared. So you need to be aware and do that pre-trade mental check. And if you're not in the right frame of mind, simply walk away, because it's just not worth it. You're likely to make irrational and emotional decisions and not be disciplined with your approach. Part of consistency, the simpler we can make things and focus and direct our focus on 1 or 2 instruments, it's a lot easier to develop consistency. So for me, as a day trader with the Day Trader Pro, I focus on one trading instrument. So what that enables me to do is start to learn the characteristics and nuances of that particular trading instrument, how it reacts under different market conditions. And it makes it a lot easier by journaling it to adjust if those market conditions change, as opposed to focusing on 10 or 15 different trading instruments, where it makes it very difficult. Strong believer in reducing chart clutter. A lot of retail traders place multiple indicators on their charts. Yes, it looks fancy, but it just simply makes things a lot more difficult with your trading. So the simpler, the better. And finally, practice with purpose. So quite often when we start with a new strategy, we start on a demo trade, and there's a big tendency to take shortcuts with the mindset that once I go live, I will then respect the rules. Well, that already creates a bad habit. So you need to create that habit and consistency even when you are trading a demo account. Treat it like you are trading a real live account.
Okay, so tell us more about what a systematic and consistent day trading approach look like.
Okay, so again, with day trading, if you can, in order to ensure that it's a systematic approach, you must be able to map it out. Okay, so I'm just going to quickly map out a step-by-step guide to the process that I go through with the Day Trader Pro. So starting off, obviously, need to make sure that it's okay to trade. So for me, unless there's a FOMC announcement or an ECB announcement coming, I trade every single day, obviously not the weekend. So we just double check that. And we start the trading session. So the first step is there a trading plan in place? If there's not, well, then obviously you need to make sure you have a trading plan in place. If there is, then my next step is I need to update my charts, and I'm simply updating for more current support, key support and resistance areas. If they're not updated, then I need to update. Next step, once they're updated, I start to monitor the charts for my setup requirements according to my trading plan. Now, as I mentioned earlier, I allocate 90 minutes to trading every single day. So if my setup requirements haven't been met during that 90 minutes, I simply finish the trading session. Okay, so it's done. I walk away and I'll look forward to the next day. If not, if my trading setup criteria has been met, then the next step is I have a second step. I need to make sure that I also have met my entry criteria. If neither of them I have, I keep monitoring the charts and making sure I'm within my 90-minute trading session. If both the trade setup criteria and my entry criteria has been reached, and ensuring that I am still within my 90 minutes, I place my trade with already a predetermined stop loss and take profit. Now we have an option on the Day Trader Pro. You can either manage your trades, in other words, adjust your stops to break even and then lock in some profit before the ultimate profit target, or you can simply walk away. At the end of the day, over a 12-month period, whether you manage your trades or you don't, results are very, very similar. So as you can see here, unless you can map out your trading approach and system, if you can't, then it's not a systematic approach. If you can, then you can say it is a systematic approach, and then it makes it very easy to apply that process on a consistent and daily basis. So just to go through a day trading checklist, so as we mentioned, there's a number of reasons, key reasons that retail traders struggle, and particularly day traders. And obviously, first and foremost, they have no defined strategy or trading plan. The strategy that I've created, the Day Trader Pro, very clear and precise trading rules. We know exactly what we're looking for, how we enter, when we exit. And this is a big one, over trading and emotional trading, particularly after a losing trade, tendency to revenge trade. Well, how do we address that with the Day Trader Pro? Well, the rules are very simple. We have one trade per day per trading strategy. So whether it's a winning trade, losing trade, or even no setup or a break-even trade, that's it. Once it's done, it's done. So it eliminates the temptation to go back into the markets through an emotional approach. Poor risk management is another key issue that we addressed. Day Trader Pro, as I said, we risk 1% risk per trade with a predefined stop loss, which is actually fixed in pips. So we don't need to alter that at all. You see a lot of, or you hear a lot of traders focusing and talking about their win-loss percentage rather than risk reward. Now, as an example, you hear a trader say, look, I've got a 90% win-loss percentage, which actually sounds on a surface great, but what if they're risking $100 to make $10? Okay, so they may have 9 winning trades that generate some $90 in profit. Then they have one losing trade. Yes, they have a 90% win-loss ratio, but they've lost $100. So they're actually down $10, even with a 90% win rate. So what's more important, where the focus should be, is on asymmetric returns. And so we aim to risk 1 in order to make 2. So even then, if you get 40, 45, 50% of your trades correct over the long term, it's still going to be a positive return. Obviously, and I was similar to this as a swing trader, what to trade. I was trading, as I mentioned, looking at 15, 16 different currency pairs alone, let alone other trading instruments. The approach here is we focus on one trading instrument. It makes it very, very simple. Routine and discipline, another key factor. Now, with a day trader pro, as I said, we've got the same rules. We look at the same trading instrument. We trade the same time every single day for a maximum of 90 minutes. So it makes it very, very easy to implement a routine and stick to it. Edge identification. Again, how do you identify whether your strategy can survive under all market conditions? And I'll show you shortly. Now, we've had positive results since the launch of the Day Trader Pro. In fact, it was launched April 1st, 2023. Wasn't April Fool's joke that we thought that we were launching. It was for real. So, as I said, we had positive results every year since the launch. So just to show you, 2024, this is all based on simply taking one trade per day, risking 1% risk of our total capital. 2025, you'll see here we've got 5 minute and 1 minute. So in June of this year, we launched the second strategy. It's based simply off a 1 minute chart. A traditional strategy is based off a 5 minute chart initially. And so we have launched a second strategy, but it's looking at the same chart, looking at the same trading instrument. It's simply another way to capture the move that happens within that first 90 minutes.
Okay, so in fact, we already have questions. You're going to tell us more about your day trading system. Yes, but in the interest of time, today we have many scheduled speakers. You can sign up for our next webinar where Alex not only talks about the day trading system, he talks about how to create your own day trading system. And it's a step-by-step guide to create a trading system. And that's what he did for the Day Trader Pro system that he's currently talking about, the one that he uses. And with that, there's a sign up code and you get a free ebook with your sign up. You can, which is the first steps to trading success. So whether you're a beginner or a long-time experienced trader, this first steps will help you guide you on the right path and what we think is the right path. And if you're very interested in the system, we will tell you more about it in the webinar on 21st of August, 7 p.m. Singapore time, 9 p.m. Australian Eastern Time, 7 a.m. Eastern Standard Time. So sign up for it, and Alex will go through the process of how he created the system and how you can create your own with a step-by-step guide. So even in this presentation, Alex has given you a checklist, two checklists, and one flow chart, right? So it's something that you can be really useful in your own crafting your own system and you're helping your trading process. So if you are very confused as to why you need a flow chart, and then the answer is you want to be systematic, you want to be consistent, you need to have this process that you follow for every trade, right? It's not just trades that go wrong or trades that go right. It's every trade that you do, it should follow this process. Now it's the time to answer some questions. We have quite a number of questions, so I won't be able to get to all of them. I'll try to summarize a few questions and add it all together. So there's a question about, can you trade too much on any day? And a question, so maybe Alex, you want to talk about that?
So the answer to that is no, I can't trade too much because, as I said, the rules that I apply, we're simply looking to place one trade per strategy. So I have two strategies on the same trading instrument, and that is it. So that removes the temptation to overtrade. So as I said, quite often we'll have a winning trade and we've taken our profits and we see price continue to move in our original direction. And there's obviously a big temptation to re-enter. We don't do any of that under this strategy. So makes it very, very simple. So no overtrading.
Yeah, sorry to interrupt right there, Alex. I also would like to add my 2 cents to that question. Can you trade too much on any day? Specifically for Alex, no, he cannot, because he has a consistent and systematic trading approach, which limits him to only one trade per day per strategy in the 90-minute window that he assigns himself to trade. So this guy has super discipline, right? If it's reached like 89 minutes, and then suddenly one of his criteria is met, and then so he has two sets of criteria, one to where the trade is now possible for entry, then he has a set of criteria that says, okay, now we get into the trade. So when he gets his entry criteria in the 91st minute, he doesn't trade anymore because the window has closed. So that will explain to you the flow chart. If you look through it again, why he has two, then he checks whether the window has closed. If it has closed, he gives up and goes home, right? Or he's already home. He goes to the pool or goes out for dinner. And that's very important because most people, they will be like, okay, it's 91st minute, it's all right, I will trade, right? And they basically have no rules. So to answer the question again, can you trade too much? If you're not Alex, you don't have a trading system that is consistent and systematic and structured. Yes, I think that is the problem with most retail traders and some professional traders as well. They overtrade. Many people tend to overtrade because they think and it's two ways around it, right? It's slightly long answer, but two ways around it. If they're doing well, they think they don't want to quit while they're ahead. Let's do more trades. And if they're doing badly, they don't want to quit while they're down. They want to do more trades, right? So they keep trying to make back while they've lost. And yes, you can trade too much if you do not have the rules and you don't have the structure to help you stop yourself from emotional trading and trying to chase returns. So yeah, you can trade too much unless you put rails and a framework around yourself to stop yourself from all your human emotions. Okay, so so yes, we are talking also about how do you set a protect price for your profitable trades? Do you do that? Do you like protect your profits?
Okay, so we have, as I mentioned briefly, we have two approaches. So one is you can simply place the trade with your initial stop loss and profit target, which is looking for a 1 to 2 risk to reward, and you walk away and leave it. Or alternatively, we do have a trade management process, and that simply means this: when the trade goes into a certain distance to profit, we bring our stops to break even. When it continues moving in our profit direction, we can lock in a 1-to-1, and then we leave our final profit target. So there is an option to trade. All we say here is that just to be consistent, because over the course of the 12 months, the results, and we have back tested, if you like, or are very, very similar. So it's entirely up to the individual trader which approach they want to take. It depends on your emotional status, whether you're happy just to place and walk away or you manage.
Yes, question here about you talk about your DAX, because what is a DAX, and can this trading strategy also apply to other instruments?
Yes, so I've opted, so what I trade now is the open of the European session. So it was important to identify a trading instrument that is highly traded during the European sessions. So initially it's on the DAX. However, we have we have actually live traded and adapted the strategy to other trading instruments, even currency pairs. And we have also traded it in different time zones. So the system is adaptable to other time frames and other trading instruments with a little bit of refinement, obviously, because each trading instrument, their characteristics are slightly different, obviously.
Yes. Okay. So about the time window, do I really have to only trade at the start of Eastern European markets?
No. So, and this is one of the things that obviously in the next webinar, the process that I went through is obviously finding a balance between when I wanted to trade and finding a time, whether it's in the Asian market, the European market, or the US market, uh, when there's a lot of momentum and movement in the markets. So you can basically identify it, and that's what really the next webinar about creating your own trading system helps you identify perhaps a more suitable time for you and when to trade the markets and sort of narrow it down what to look for and identify when there's enough momentum in the markets to obviously get the appropriate risk to reward on your trades.
So regarding next webinar, is there any prior knowledge required? Because I'm a beginner.
Absolutely not. It is the system is actually a very, very simple system. I'm a strong believer in simplicity. So even with no prior trading knowledge, it's a very easy approach and system to learn. Just a few steps. Basically, it's a 5-step trading system.
Okay, so final question here. Uh, if if I learn this system, then would I be able to trade in the time that I want and the system, the instruments that I'm comfortable with?
The short answer is yes. Obviously, you may not be able to trade in the exact time that you want because you got to find a balance between ideally when you'd like to trade and finding that during that particular market session there's actually movement. Obviously, we don't want to be trading generally during midway, during lunchtime break of the Asian session or the European session because not much movement happens. So there's a balancing act to identify when there's enough movement in the markets and align that also with when you would like to ideally trade.
Yeah, so I will add my answer to the for that question. Alex mentioned earlier he trades the most liquid markets in the time window. So he chose that time window to trade. Wherever you are, you can choose whatever time zone you want to trade, but you must find a market that is that has enough volume and enough participation from various participants such that you will not be disadvantaged, right? If you're going to trade a small market with very poor liquidity, meaning very low volumes, you probably on the losing end without the information that the insiders have, right? So find liquid markets, trade the ones that is more transparent, and there's where some retail traders go around. They trade in markets that are too small, such that when the insiders do something, it moves the markets and you don't even know what's going on. That's where stop losses and sizing your trades helps. Okay,
Yeah, so
with
that's
that, we
again,
sorry.
so that's exactly the process I'm going to show you in the next webinar, how to identify where that momentum and liquidity is in the markets under various different market sessions.
Oh, okay. That's good. I'm looking forward to that. So again,
Okay.
21st of August, I too want to find out how to find which markets are liquid enough for me to trade. But it comes with more than that. It gives you a step-by-step guide, more than the flow chart that you've seen, the checklist that you've seen, the exact process that Alex has used. Alex continues to use to create his day trading process system. And he mentioned briefly in this presentation as well that he added a new strategy this year. So it's very important because you continue to refine your process, even though you have one. Of course, if one is not working, you definitely have to refine it. But if it's working, you still be continuously on a continuous lookout for the one that can be better. And because markets change and markets, you have to adapt to market changes. With that, thank you for attending our webinar. And the next one begins in 10 minutes from now at 11:20 Singapore time. We're going to take a break now. We will see you in the next one, and it will be presented by Lachlan Meakin, and it's about the outlook for hot markets in 2025 for gold, cryptos, and AI stocks.